Hey guys, it's time for me to do another video, and I'm probably every time I do one of these, I think to myself two things. A, I wish I had better software so I could put a little window up here of my ugly mug talking to you. The other thing I wish I could do, is keep these things a little shorter. I just have a tendency to go on and on, so forgive me for that. We are looking at the chart of Kaspa. We are using the MEX-C data here on TradingView. I am looking at this on a logarithmic chart. The reason for a logarithmic chart is because anytime you have an investment vehicle or a chart where human emotions are involved with buying and selling, I think it does you do well to use a logarithmic chart. And the reason is simple. On a log chart, the same vertical distance when you're at a low point in the price, that vertical distance for, let's say, a 50% gain is constant throughout the entire chart. Okay, now think about it just for a second. If you buy a $1 stock and it goes up $50 to $51, are you thinking you might want to sell that? That's a 5,000. Is that right? Yeah, 50. That's a 5,000% increase. I'm thinking you have a pretty good motivation to sell that. What if you buy a $5,000 stock and it goes up $50? That's a 1% increase. You don't even think about selling. So when we look at a chart and we're trying to figure out what human beings are doing with their buying and selling, I think we do better if we use a chart in which percentages have the same visual significance on the chart. Now, there's some things you don't want to chart on a logarithmic scale. I'll give you another example. You don't want to chart, let's say, temperatures. A temperature graph, you don't want to do that. Rainfall, no, you don't want to do rainfall. There's certain bits of data where you really just want a discrete number and you want it to be on an arithmetic scale. But when you're looking at human behavior with something that people put money in, I think a log chart makes sense. And to prove the point, we are looking at a log chart right here, and you can see where Kaspa appears to be pretty much in a parallel set of lines here. But if I click on down here and turn off logarithmic, can you make sense of that? I mean, forget these lines back here, but look at how squished down all of this is over to the left, and look how exaggerated everything is over to the right. Now let's go back to log scale. Oh, now that nice move from about 0.14 cents or whatever it was, where would be 0.014 to just under a penny. All of a sudden now that now is a very significant move, and this is a very significant move. This is not as significant because this did not go as far as this. Now, so that's why I harp on log charts. Now, let's talk about something here in the chart. I've said this before, and I just want to point it out again. We have an inverted head and shoulders pattern down here. This purple line is the neckline. This pattern alone should take Kaspa to 6.8 cents, all by itself, without anything else in the chart. That should happen. We have reached some resistance back in early August, and we have reached some significance this past week in what honestly was a very disappointing week. by virtue of the fact that we had a nice gain, what appeared to be a breakout that took place over a 6-hour period. And instead of a pullback and a resumption of that trend, we ended up with more than 48 hours of nothing but selling pressure. Now, just between you and me, I'm thinking that's happening for a reason. And I don't think the reason is because there's anything wrong with Kaspa. I don't think the reason is that there's anything wrong with the health of this as an investment. I think the reason probably has to do with two things. First off, if you trade futures at MEXC, KuCoin, or any other exchange that has futures, think of yourself as a poker player who's playing poker with his cards face up on the table. And not only that, think of yourself playing poker with your cards face up on the table, and the dealer can just go through the deck and choose any card he wants and gives it to anybody he wants to. Why do I say that? Because your futures trade on these exchanges is totally transparent. And if MEXC or some other exchange looks at the totality of the futures trades and says, okay, we have this many longs, we have this many shorts, how can MEXC make money? Well, whatever it is, whatever direction they want to take Kaspa in order to liquidate longs or liquidate shorts, while I do not have proof of it, I think we both know enough about human nature to know that that will happen without any regulation, without any oversight, without any fear of recourse. I guarantee you, if human beings are involved and there's money to be made, they will do what it takes to make that money. So when you place a futures trade, and probably what happened was there was a good number of futures that went long on that nice breakout, and MEXC looked at that and said, nah, I don't think so. And immediately we started just an almost incessant bit of selling that took place for more than 2 days. Now, let's talk about some more positive things. Inverted head and shoulders pattern, 6.8 cent target. We aren't there yet. We're at 4.68 cents. We got a ways to go. We got more than 2 cents to go here. That's roughly doing it in my head, more than 40% gain from where we sit right now. Let's take a look at something else. Let's go to a 4-hour chart. I have to sort of rearrange things here because for some reason on my computer, and maybe you too, we also have another inverted head and shoulders pattern right here. Okay? It has a target of 5.5 cents. We almost made that when we got up to 5.4. So I don't know that we can really count on that for much more. If we look at things now on a 15-minute chart, you can see that we also have a much smaller inverted head and shoulders pattern here. That formed, and then we broke out above this yellow line, which was the trend line of resistance that had kept us down for 2 solid days. You can see we broke out over that this morning, and it appears that we are currently maybe kind of pulling back a bit, perhaps for a back test of this line. I believe this is probably the low for the short term here, possibly for the midterm and long term, depending on what happens with the relation to this blue line up here. But you can see in small inverted head and shoulders pattern breakout. This pattern actually has a target up just over 4.9 cents. So we have not made that yet. When might we make this? I don't know. Maybe over the weekend, maybe Monday. Maybe we slide down this yellow line for a little bit if Mech C wants to liquidate some more longs. And that, here's the deal. They can do it. They can do it. And there's no penalty to pay for it because they're making money. As a matter of fact, they're being rewarded for doing it as opposed to potentially being punished. The other thing I want to show you is, we were talking about these descending broadening patterns, and I mentioned that every time Kaspa has had one of these patterns, it has always broken out to the upside, and so far it has always led to a nice gain. I could go back in the chart and show some of these to you from weeks and months ago. I'm not going to do that. You can find them yourself. I just recommend that you look for them on a logarithmic chart. Otherwise, they will not look right. They may look like a parallel channel. Finally, this blue line. What is the blue line? Well, a lot of people are posting charts in Telegram, and I'm going to pause this video just a second. And what I'm going to do is, I've got to bring this thing up over here. Sorry about that. I'm going to pause the video and I'm going to bring up a chart that looks very similar to what we've seen in the past. Okay, admittedly, this looks like a mess, but what'll happen is someone will post a chart that's a screen cap done on their smartphone, and because of that, it will be in a vertical format, and because it's in a vertical format, they want to, and also because it's a phone, they want to zoom in on to try to get to the more recent data. So you end up with a chart that has this steeply upsloping line right here. You can see it's just going up at a crazy pace, and then you'll have this lower red line down here, and that lower red line is tilted straight up. And you look at that and you go, boy, that is about the ugliest ascending wedge I have ever seen in my life. Nothing could be more bearish than this thing, because it is absolutely, it has to fail. It has to. There is no way this thing is not just going to slam us back down to 3 cents. And frankly, it's probably going to take us down to a fraction of a penny. Okay, let's look at it in a little bit different way. I'm just going to go ahead and do this real time here. Let's bring this channel back to where it looks like a channel. And let's zoom in like this. And now we're looking at the exact same thing. This blue line is rising. Okay? Back here, it was at 4.2 cents. Right here, it is at 5.5. But it is not, to my eye, this is not a rising wedge. As a matter of fact, this looks more like a cup and handle. And if our inverted head and shoulders pattern does its thing back here and gets us up to 6.8 cents, this should be a cup and handle pattern that breaks out. All right, now let's talk a little bit about upsloping necklines. I've read Technical Analysis of Stock Trends by Edwards and McGee. John McGee is perhaps considered to almost be the writer of the holy writ of technical analysis. And he says about, I'm not talking about cup and handles. He doesn't talk about cup and handles. He talks about inverted head and shoulders patterns a lot. Cup and handle, I think, is just sort of a new observation, but hear me out. He talks about inverted head and shoulders patterns, and he says an inverted head and shoulders pattern with a flat neckline is pretty much normal, average. A slightly down-sloping neckline, you see that quite often too. But the ones that tend to perform the best are patterns that have a slightly upsloping neckline. So I would extend that to the cup and handle idea and say that a cup and handle that has a flat line for the top, for the resistance, would probably be about average. You're also going to see some with a slightly down-sloping neckline. Matter of fact, some people may ignore this left shoulder over here and call this a cup and handle with a down-sloping neckline. But this is if you're comfortable with the idea that John McGee is telling the truth, then I think it's worth considering that this is a cup and handle. And how do you measure a target from a cup and handle? Well, the same way you do with an inverted head and shoulders pattern. So with an inverted head and shoulders pattern, we measure the depth of the pattern. I think that's about it. You look at where it broke out, and then you look at where the top is. And like I said, in this particular case, the way I measured it ends up being 6.72 cents, 6.8 cents, okay? So how do you measure the cup and handle? Well, you go and you measure the depth of it. And in this case, we have to pull that down a little bit longer because it's deeper. And because if it breaks out, it's going to break out at some point in the future, probably, well, I don't think it's going to break out. It could break out over the weekend. I don't know. It may take a long time. But whenever it does break out, worst case is it breaks out today. So where is our target if it breaks out today? Look at it right over there. 0.222 cents. 22 cents. Now, is this a cup and handle? No, not yet. hate to break it to you. And this was not an inverted head and shoulders pattern until we broke out over this neckline. So, guys, just a couple things to think about. First off, this is crypto. It is volatile. I don't think the people who trade crypto are exactly, well, I don't want to disparage anybody, but I don't think it's the same people who are going to the country club and trading SPY futures, who are trading commodities, who are trading stocks. I just don't think it's the same kind of people. And for that reason, I think it is much more volatile. And also, I think for that reason, because of expectations, it also can provide ridiculous gains in a short amount of time, because that is the sort of the general expectation. So let's see going forward if we can get over this blue line here, because if we can, that is a powerful pattern that points us to a very significant gain. Right now, we are underneath this blue line by a fair amount. We are at, well, let's call it 4.7 cents, and currently that line is at 5.5 cents, which kind of interestingly is the target from this inverted head and shoulders pattern, if it gives us the complete target. Of course, if we get there, we remind ourselves, what about the big inverted head and shoulders pattern? It tells us to be looking for just under 7 cents. And in that case, we should be getting over that line. Anyway, thanks for watching. Sorry to have gone on much longer than I thought I should have. And there I've got to do that again to bring up my little control panel. Signing off. Thanks and take care.